Hey everyone, welcome to the daily recap. Today is Monday, January 25th, and we posted a video today about moving averages and candlesticks. And there's a good video by Josh Brown that explains how price action works and how the stock prices move um, along with but different from the economy. And with today's price action, I wanted to post a video that helped put some context around it. So we had an interesting day today. The markets were up, everything was up actually, but it didn't look like it at the beginning of the day. So as we've been talking about looking for a pullback, things being overextended, um, we got that sell-off, a sharp, vicious sell-off right in the morning. Here I can show you the 5-minute chart and watch what happened here. I'm sorry. So look at this. This was yesterday, the close, and it opened up today, was going up, and then just a sharp, vicious sell-off. Went from 385 almost down to 378. So, almost 7 points within a matter of 25 minutes. So we're looking at a 5-minute chart here. So each one of these candles is 5 minutes. So you just saw a brutal sell-off in the S&P and the NASDAQ. When stocks go down, bonds go up. So we saw bonds ripping. We saw the dollar ripping. And we saw volatility ripping. So, but as you can see, there's a lot of buyers waiting for prices to get cheaper. So the dip was bought. It sold off and it was bought immediately. And price went right back up to where it was. And at the end of the day, might have even closed higher or right at the highs. So, we got that sell-off that we'd been talking about. And that was enough to get positioning switched to get people to sell out, and that way the market makers, were able to purchase it at their low prices. But look at how things happened here. So in our video today, in the blog section on moving averages, you'll see what we talk about, how as the candle fell, as sellers overwhelmed in the morning, and now we're on the daily charts here, so daily candlesticks, so each one of these is a day. As sellers overwhelmed and it broke through the 10-day moving average, this yellow line, it got down here towards the 20-day moving average, and then buyers bought it back up, and it even closed higher on the day. That's why it has a green candle here. So if we're talking about candles being like a football game between one side, the buyers, and another side, the sellers. The buyers overwhelmed the sellers today, and it'd be like in the first half, the sellers won, pushed the market down, but in the second half, the buyers came back and won. So the NASDAQ here, this was a little different. Similar in how the sellers overwhelmed in the morning, but in the second half of the day, the buyers could not bring it up high enough in order to make this a green candle in order to win. So the sellers, even though the stock was up 0.83% today, the sellers still overwhelmed because of the red candle. So from the open in the morning to the close in the afternoon, price went down. Okay. So on TLT, this represents long-dated bonds. So we've been talking about how there's this gap right here, and gaps tend to get filled. So even though the stock had come down and started to come up a little bit, we talked about it was holding under the 10-day moving average, but if it could get above it, it's going to spring up and look to close this gap, and that's what it did today. It got higher than the most recent highs. It broke through the 10-day moving average yellow line and got up to the red 20-day moving average where it finished. It didn't get resisted by it. It still closed towards the top of the day's range. So we'll watch tomorrow and see if this gap gets filled. If we do, it's likely to run into the longer 50-day moving average green line. And there would be a place where I bet it could see a lot of selling resistance. We've seen it get resisted a couple times already here, 3 times lately. So that's definitely going to be a magnet with the gap. So we'll just watch and see. I'm not saying that price couldn't get resisted back down and trend around for a few days, but gaps like to get filled. And with the 50-day moving average green line right here, there's 2 points where they act as magnets. So when we bring that up, because when bonds are up, stocks are typically down. So even though today stocks gapped up, it was kind of a damaging day to some of the bulls. It scared a lot of people when that happened today. So we'll watch and see. The other thing that could be pressuring stocks is the US dollar. That's UUP. You can see that it's been in a downtrend, resisted by some of these short-term moving averages, the yellow 10-day moving average and the red 20-day moving average. But in the last couple weeks, price has risen above it, and instead of using it as a ceiling, it's now using it as a floor, as a support. The dollar is very oversold, and a lot of experts and analysts are expecting the dollar to rise. Or maybe they're not expecting it. They're not positioned that way. So if it were to start to rise, it could rise quickly because it's not being expected. That would also put downward pressure on our markets. So gold has been trending along the long 200-day moving average. This is the longer term moving average. If you watch the videos, this would of the blog video we posted today, this would be more like the man in the video. He's walking along a straight line, while the moving averages would be like the dogs bouncing around. So gold has been trending along the 200-day moving average, the long term, the short, the slow moving average, which means it's probably looking for direction. If the dollar breaks higher, that could put pressure on gold, which would send it lower. And if it gets below some of these most recent lows, then it's lookout below for gold. And last, volatility. We saw volatility jumped up really high in the morning and then got towards this 20-day moving average that you've seen it resisted 3 times. And fell back today to where the short-term moving averages are, the yellow and the red line. So I've also heard a saying that each time that these moving averages are like glass, and each time it goes up and tests it, it weakens the glass a little bit. So this is 3 times now volatility has risen up and hit this long-term 200-day moving average. If it could get up there a 4th time, maybe that's the one that breaks through. And that would cause, if volatility rises, the stock market is falling, bonds are going up, the dollar is going up, gold would probably be going down. I mean, that would fit with some of the patterns that we're seeing playing or looking like could happen, some of the scenarios. We don't try and predict what will happen. We just follow along with the trends. But we do still see the market in general above these fast-term moving averages. So it tested it today, but it was bought right back up. And the NASDAQ, I believe, made all-time highs today, even though it had a red candlestick from the open. It gapped up high enough open that even though it finished down, it still made new highs. So we'll continue watching what happens. Maybe that was the sell-off that scared everyone out of their positions, and now it's free to go back higher. We don't know. We'll watch and see. So let's move along to the stocks that we're holding. These might be different than what you're holding because, like today, there was, I believe, another 70 stocks that hit the scanner. So obviously couldn't get positions on all of them. So, and our positions were full. So these are the ones we were holding from yesterday. So let's go over those. So the first is BSBR, Bank Santander. So looking at our candlesticks, we have a red candle, so sellers overwhelmed buyers today. Not only that, the low of today, 721, was lower than yesterday's low of 728. So buyers not only won the day, they continued the downward trend that they've been on. So just because the stock's going down doesn't mean it can't revert. It's been down since we bought it 2 days ago, but our sell target still is the convergence of the green 50-day moving average, the yellow 10-day moving average, and the red 20-day moving average. So right around here, you see it right around 8 is where they are all starting to converge. That's going to be a magnet, we think, for price. So that's why we have our sell targets where we do on that one. So if we get an update tomorrow, it could very easily clear yesterday's high and bounce back up to test these levels. So we'll see what happens tomorrow on that one. The next one, ENBL, it has been bouncing along the green 50-day moving average. It has also been being resisted under the red 20-day moving average. So it is kind of ping-ponging right between those two right now. It did break up above yesterday's high and above the red 20-day moving average, but then was resisted here at the 5-day moving average, this light blue line. And it ended up closing above the red and green lines, so that shows us that the buyers might be back, might be ready to go ahead and push back up to the next level, which would be our sell target at the 10-day moving average yellow line here at 5.82. The next stock, EPAC. So this, we have a red candle, which means the sellers dominated today. Not only that, it made lower lows from yesterday, so this downturn is still intact. We have the light blue 100-day moving average below it, so that would be a place where we might find a bounce and get support from buyers. If it breaks below that line and below this low on December 23rd, which is a low of 20.05, the next level of support is the 200-day moving average at 19.6, and we wouldn't want to let that fall all the way there. So if it breaks below this 20.85, then we're going to look to sell out for a loss. That's too far for us to risk a drop. It's very possible that it could bounce and then keep going, but sometimes we have to take losses. So that would be an area where we would take one. If we get a bounce off the red or the blue 100-day moving average at 21.1, then the next stop would be our sell target around the green 50-day moving average at 22.44. So the next stock is FRC, First Republic. So it was supported nicely here on a red 20-day moving average. We bought in around here. So we have a slight gain, I believe. There is a gap right here between these 2 days, so our sell targets are going to look to be the low of right here when the gap closes, 157.35. And then this yellow 10-day moving average is at 157.75, so that's going to be a great place for us. We'll probably end up selling this in the morning if it gaps up at all. The next stock, Humana, we've seen it bouncing off this 200-day moving average, the purple line here. So it hasn't really broken through, it hasn't closed through, but it's been ping-ponging between the red 20-day moving average and the 50-day moving average green line. There's just a confluence here of moving averages and price action. So we had our sell target up here at 423, the yellow 10-day moving average, but it has been falling down, and as it does, this is going to be our sell target. We're probably going to take a loss on this somewhere around the green moving average, 409, 410. I think we're in it at 420, so we'd be down $10 on that one. But again, the market hasn't been trending for us here, at least this stock. So sometimes you got to take a loss on this one. ITGR hasn't really done much today. It was an inside day. It didn't make any. It did make new lows. 77.09. Yesterday's low was 77.48. So it did poke through. The green 50-day moving average is 77.52. I guess it closed below. It broke below there today, but then was bought back up and closed above it. So that's a good sign for us that it's holding up. But we'll probably look to sell out at this red 20-day moving average as it's ping-ponging back and forth between there. We don't know what's going to happen. We're not looking for breakouts. We'll probably sell this one. I'm not sure what we're in it on. We would have just bought it around here, so it's probably a wash. No gain there, no loss really. The next up stock is iTub. We bought that, I believe, right here at 5.6, and it has gone down the last couple days. So as you can see, once it broke, you saw the short-term moving averages start breaking, price breaking below the 50-day moving average red line, and now even the short-term moving is pulling the short-term moving averages down below it. This looks like it's the start of more a bigger downtrend. So I don't know if the stock will fall all the way down to 507. That would be the next level of support. After that, it would be 484, the purple 200-day moving average. That's a long ways for the stock to go. I'm thinking if it were to break below this 507, we'd probably want to get out. It could bounce back up and start testing these moving averages, but I'm not sure how long that's going to be. These moving averages, the short term crossing the long terms, indicate trend change, and so that's not what we want to be in. The next stock we bought, KEX, I think we bought that yesterday. So we bought it because it was being supported here at the green 50-day moving average. So that's when we got in. Today it made lower lows and closed below the 50-day moving average, which is not a good intermediate term look for us. So we'll look for tomorrow to see what happens. If we can bounce back up above the green line, then we're probably going to go back up and test the red 20-day moving average, and somewhere around there, and the yellow 10-day moving average would be where we'd want to look to sell. If it does break and start making new lows, the next level of support is this long-term low here on December 21st. Of the low was 48.51, and the 200-day moving average is at 47.61. So If price falls further, it's probably going to go down to test these levels, and if it breaks those, then we're going to want to get out. KNSL. The last 2 days we saw buyers overwhelming. We had green candles. Today we had a red candle, still kind of not knowing what it wants to do. It didn't get quite down to the 200-day moving average, and today did not make a new low. So it was a higher high and a higher low. That's the definition of uptrend. It's only the second day of it, so a candle, so can't expect too much. But I do think that price will come up and test these yellow and red 10 and 20-day moving averages, and those might be good places to sell. LVS has struggled for us. I think we bought it here. We didn't get filled when it got up here. Didn't quite make it to our sell targets, which was the green 50-day moving average. It was resisted by the 10-day moving average yellow line, and then fell and made lower lows today. Broke through the 100-day moving average, and that's not a good sign for us. Except that it was bought back up and it closed above the 100-day moving average light blue line. So it didn't break all the way to the purple 200-day moving average. That's a good sign for us. It still might get there, especially since the 100-day moving average has been broken. The next level of seeking out for the market would be that 200-day moving average purple line. But it's possible we get a bounce up first to this yellow 10-day moving average, and that's probably a place we're going to look to sell. I believe we'll probably be selling that one at a loss. PG was up 1.72% today. Big strong move off the 200-day moving average line. So not only did it break above it and close above it, closed above the 5-day moving average, it made new highs from yesterday and the day before. And so it looks like 134.15 is in sights, the 10-day moving average yellow line. So that would be the next level that I think it has momentum going to. It can probably break up, but if we see it poke above this 10-day moving average at all, then it's very likely that it has enough momentum on the bounce off the 200-day moving average here that it will go up and even try the red 20-day moving average. So we'll watch there. We may sell out if it doesn't get above the 10-day moving average, but if we see it poke up above it all, we'll keep holding. USB is hugging the 50-day moving average green line here. It did make new lows today from the last 4 days, which isn't a good sign, but it closed at 45.76. That was right at the 50-day moving average. So we'll watch that and see tomorrow. It could ping pong back to the red and yellow 10 and 20-day moving average where it's converging there. So that's our sell target there. The last stock, VRSK, we saw a big red candle today, sellers overwhelming. That's keeping with the trend, being resisted by the 10-day moving average. It even made new lows, and so depending what happens tomorrow, we may want to sell out if it starts pushing, making new lows. If it opens low and then starts gapping up and moving up, then we'll hold. Maybe look to get out here at this 10-day moving average. But if it opens up and starts making new lows, then the next level of support way down here at the 200-day moving average at 180, we don't want to hold it that long. So if it starts making new lows tomorrow and holding them, then we'll go ahead and sell out of that one for a loss. So long video today, but we had some lessons and some tutorials in there, so I hope you found those useful. And let me know if you have any questions or comments about any of this, and I'll try and answer them. All right, thank you for staying on and listening. All right, bye.